All right, it is time for pre-market prep at the close.
Three consecutive highs, opened, matched yesterday's low, and then once it took out there, that's all the breakout momentum traders needed.
Hey everyone, sorry I'm late. I've been working with Gil Morales to get Gil on the show here. We're having some technical difficulties, so for that I apologize. Oh, I think that's Gil. Let me see if we can get him in here.
All right, I'm here.
All right, guys, if you're gonna hear Gil,
right.
let me know, because I know I hear Gil, and
Yeah.
I hope you do. Gil hears me, I hear Gil, and the chat hears Gil as well. So
Technology works.
Amazing.
Talk about a pain in the butt, but anyways.
Hope everyone has had a good day so far. It's not over yet, of course. Gil,
I have.
How you've had a good day? Tell us about it.
Yeah, I mean, I was telling you yesterday that I wasn't doing much, and I wasn't really doing much yesterday. The only thing to do yesterday was to short the big gap up in Virgin Galactic. But then today, come in and you get the high CPI number, but about 42 bips of that, what was it, like 0.09%? So I think 42 bips of that, or whatever it was, almost half of it was increases in used cars.
Yep.
So, the market's like, okay, so you see the 10-year come down, the market starts to rally, they send the NASDAQ up high, and the Dow's staying low. So you got, you always get these divergences going on. So at that point, I got things sitting up at moving averages, just come in and hit things short. And now I'm 400% short going into the close.
What? Wait, come on. So what are you going to do between now and then?
Well, I've got 22 minutes to cover. So I'll cover things into the close. But a lot of these things are breaking down. I mean, the metals, you got AA, Alcoa, Steel Dynamics, Twitter's reverse, 3D Systems has reversed, Marriott, the hotel chain, is breaking down from the 50-day line. So there's stuff breaking it down all over the place. But, that's kind of been the story of this market, because despite the fact that you can see that the indexes are going higher, NASDAQ, S&P, the NASDAQ 100 all making new highs, but every day you've got stocks getting beaten up underneath the surface. So it's basically like, I heard someone refer to it as a rolling bear market, where you have sectors of the market that are correcting even as they're making the indexes go higher. We were at the bar the other day for the first time in a year and a half, mulling over whether there are algos that know exactly which stocks to buy on certain days in order to push the indexes higher, because it's uncanny how they're able to push the NASDAQ higher, push the S&P higher, but yet you're seeing a lot of groups in the market. Essentially, the inflation-related names, oils have been rolling over, home builders have been rolling over, financials rolling over today. So, it's basically been a trendless market underneath the surface, but there are stocks to hit on a day-to-day basis, and things were kind of quiet yesterday outside of Virgin Galactic, which is down another $3 today. But, you basically come in every day. I'm trading by the seat of my pants. It's like, what is setting up? What can I hit? Because as someone who's typically an intermediate term trend follower, I'm looking for stocks, I can hold a few weeks to a few months. There's really nothing out there I see that looks any good. So it's basically a swing traders, a day traders market. And every day you come in and you're trading by the seat of your pants. And I think today's another day like that.
You can understand why somebody would hear you say the term rolling bear market and just scoff, right? I mean, because the indexes are at most of them, at least.
Oh, right, because it's not a typical bear market. I'm not saying it's a bear market, because traditionally a bear market is measured by the indexes. Yeah. But what is so bizarre about this market is that you can see half the stocks going up, half going down. Even when they had the NASDAQ up, and I think the S&P briefly kissed in positive territory, you had breadth on the NASDAQ was 3-to-1 negative. And on the NYSE, it's 2-to-1 negative. So, underneath the surface, breadth is bearish. And it has been for a while. So, people can scoff, but that just tells me they don't have a freaking idea what they're talking about, because they're not really looking at all the sectors in the market and all the stocks, or they're watching too much cable financial TV. So
I mean, looking at the different sectors today, you've got technology in the green and everything else not. Right?
Exactly.
So,
and that's been the case for about the last month or so. Yeah. I mean, you can look at a lot of cloud names that have rallied since, say, mid-May.
Yeah.
You can look at names like, look at Apple, for example. I believe it's on June 11th. You can look at a daily chart there.
Okay.
And on June 11th, the stock posted a pocket pivot and it popped up through its 50-day line. It's been going up ever since. Now it's at new highs. And of course, people think, they want to get interested here. I mean, this is where I'd be selling it. And the place really to be buying it was down at the 50-day line. And I have the methods to do that.
Tell us about the pocket pivot.
Well, the pocket pivot is something that Chris Ketcher and I talked about in our first book, Trade Like an O'Neill Disciple. It's basically a stock moving sideways, consolidating normally. Volume starts to dry up, and then you'll see the highest upside volume over the prior 10 days. So it's higher volume than any down volume day over the prior 10 days, and it's coming up out of a little consolidation. So that's what you'll see in Apple. That happened, I believe.
So that was June 14th. That's what I think you're talking about.
June 14th. Okay, it might have been Amazon also did the same thing, but I think it did it on maybe that was June 11th.
Yep, that was
June 11th or June.
That was the 10th. That was the 10th, I think.
Yeah, you're right. You're exactly on the 10th, coming off the 50-day line. Yeah, okay. Yeah, so those are your entry points. Not up here. And I don't see Amazon really as consolidating. What it's starting to look like to me here is a double top short. And today it's an outside reversal, okay? And it looks like a short to me heading back the other way. So, this morning I got a signal on the SQQQs or the Qs to go short when you were up, and you're up at 100, I guess, on the NDX. And so that's when we went diving in, and now it's coming over, we're rolling over, and all these other stocks are rolling over, and a little bit like shooting fish in a barrel today. And when shorting works well, it tends to work pretty easily. It feels pretty easily. So that's what happened today. And we still got 17 minutes, or anything can happen. We could be up 100 on the Dow. Who knows?
How do you control your risk? Do you have a level?
I keep tight stops.
Okay,
I mean, basically in this market, when you take entries in the old days, and when I say old days, I mean pre-QE. If you had a position that was working and say it was up 10% for you, you would be looking at places to add. These days, and you would take a partial half position or whatever at the first buy point. As it's moving up, you'd add, maybe half more, and then half more at that point, a little higher as it's moving up at various points. But these days, what I have to do is come in, and also because I'm swing trading and day trading, I'm not trying to build positions for long-term holds, because I don't see any longer-term trends, intermediate-term trends. So what you have to do is buy at the point of impact, which is at the first buy point, and then I use an intraday chart I call the 620 chart, which is a pretty simple chart. It uses a 6-period exponential moving average, a 20-period exponential moving average, and MACD set roughly the same. And I use that as a timing tool and also to control risk. If it moves against me on the 620 chart, which is a 5-minute chart, then I'll back away, and I keep things pretty tight that way. But I realized a while ago that you can't come in here and buy a stock and think you're going to sit with it very long. In some cases, you can sit with it longer than you might expect, but in most cases, you get 10, 15, 20%, especially from a breakout. And that's it. That's all she wrote. And that's basically been the way this market works. So I think it's a matter of observing how the market works right now and observing what's happening underneath the surface of the market and acting accordingly, rather than sticking to some old technical analysis 101 rules that, something broke out and now it's going sideways for 3 days, and so it's acting constructively. There's no such thing as constructive action in this market, because oftentimes it'll just fake you out. And that's really what you got. So, I like to say the market's a bit of a hot mess, if you know what that term refers to, but it's just kind of crazy, and so many weird things out there. The Fed doing reverse repos almost up to $1 trillion. They're taking money out of the system, so not sure why. Meanwhile, you had a bad Treasury auction, the 30-year Treasury. They took it out. I think the high bid was 218 or something like that, and that's kind of what got the market set off on the downside. So there's always something new every day that's going to throw you for a loop, and you think you're making progress either long or short, and then suddenly things flip the other way. Example would be Thursday. Thursday you broke down, you gapped down, it looked like the market was going to break. But again, if you were paying attention to the stocks underneath the surface, you can look at some of the names we were short back then. Like, for example, look at Brooks Automation, Boy Roger K Sam, BRKS. And you'll notice that was a short at the 50-day line a couple of weeks ago. And then when it came down on Thursday, last Thursday, when the market was gapping down, it actually undercut a low from May 12th. And I think I have that date right there, Spencer.
Yeah, man, yep, you do. Yep.
Okay, so it undercuts that day, and that's a cover point. Okay, but that also happened to be the Thursday that the market gapped down. So if I stick to my discipline with respect to the things I'm looking for on the charts of the individual stocks, rather than fixating on what the indexes are doing or aren't doing, that's the way you handle things. So, you know, Thursday on the gap down in a lot of names I was shorting, we had natural cover signals occurring. Another one would be Micron Technology. Look at MU.
Yeah.
You can see this one. You see how it broke down and gapped down after earnings. That was about 2 weeks ago. It was sticking its head up back at that prior June 1st high. See, and there's your double top. Another thing about this market is I find that the most effective short selling pattern is a double top, and you see them all over the place. So it rallies up there, but then after earnings, you're not going to do anything with that ahead of earnings, but you gap down to the 50-day line the next day after earnings, and that's actually a short entry. It breaks down, you get one more rally up into the 50-day. That's another chance to enter on the short side. And then you break down and you find support along the lows and near the 200-day line. So when you get close to the 200-day line, I will pretty much cover any short if it's come down enough to get to the 200-day line, because that's usually the last stand support where you'll usually get some kind of a bounce, or at least you'll hold up. And so you get the bounce off of there. And when did that happen? That happened on Thursday. So, you know, that was kind of the case all around. If you look at something like Freeport-McMoRan, okay, or is that McMoran? I don't know how you pronounce that. But you see, this one actually was a short in early June when it started to fail at the 20-day line. So the short entry occurs for several days along the 20-day line, which would be between June 7th and say June 11th. Okay.
Yep, there's that period. So the 20-day, just for everyone watching, 20-day is that green line right there.
Exactly, the green line. The magenta is a 10-day, the blue is a 50, and the 200-day, which isn't on here, is red. I don't know, maybe it's on your chart, but it's not on mine. It's too far down there.
Yeah.
But in any case, you see how that breaks down. And what that one does is it undercuts a low from April 21st at that point, and that's in mid-June. And then it rallies back up to the 20-day line where it sets up as a short again. So you come back after it, short it again, and then you gap down last Thursday. And what are you doing? Now you're undercutting the low of June 17th. Okay, that's a cover point. And what happens? The next day you gap up back to the 10-day line, which is now the lowest of the moving averages there. And you can try and reshort it again there. I mean, you're getting a little juice today, but nothing really to write home about. However, it may be headed lower. We'll see. But the other thing I'm watching for right now are these cloud names.
Okay.
So if you want to kind of cycle over to some cloud names, and if you want to ask questions, go ahead.
Yeah, I mean, you have this uncanny ability to find these stocks that are undercutting their lows and then proceed to rally.
Yeah, well, I'm usually shorting them if they're breaking down, and then when they undercut a prior low, that's a short covering point. And I talk about this method in another book that I wrote, Short Selling with the O'Neill Disciples, which was published in 2015, which seems like yesterday. But in any case, you know, that's a cover point, and then you look to reshort on the bounce into resistance. Now, sometimes in this market, they just keep going through resistance, and of course, that's why you have stops, and you try to set them as close to the moving averages as possible. So, you know, looking at Freeport-McMoRan as an example, if I was hitting it, that would have been eight trading days ago when it's bumping up into that green 20-day moving average.
Mm-hmm.
What I would be doing there is using that or the high of the day as a tight covering point. So, because a lot of times, you know, they'll V these things right back up to the highs. I mean, it's such a goofy market, Spencer. I mean, I don't think I've ever seen anything quite like this, but chances are I probably have seen things that have this kind of volatility. I remember September, October of 2008 was an incredibly crazy period too in terms of what stocks would do and the intraday movements. And these days, you know, you get a lot of volatility, but by the end of the day, you got the NASDAQ and the S&P posting all-time highs. The story, however, with the rest of the market underneath the surface is mostly negative, though. So, you know, that's where I'm at right now and what I'm doing, essentially. And those are some examples. Another good one was the 3D systems. Now, and this is what I mean when I'm talking about, I'm always looking at stocks, and I could shift from the short side to the long side depending on what they do intraday. So if you look at 3D systems, way back on May 11th, and you can go back on my website on May 16th, I put out a video, which was a few days later. And I pointed out how that move off the lows on huge volume, that's a bottom fishing buyable gap up. So that can be bought using the intraday low of that price range as your selling guide. Now, if you don't catch it close to that low and it's up, then you sit back and see if it retests that low. Well, 2 days later, it does. It also holds the 10-day moving average. And then the next day, it pops back through the 20-day line. And at the time, I talked about this one as being one of my favorite FOMO names. In other words, those names, the electric vehicle names, the electric battery names, the space, the SPACs, all that FOMO that was going on into February, and then everything topped together and rolled over. If we go further back on 3D, you can see that actually did top in late February, along with all the other FOMO names, as I call them. I even have a FOMO index, consists of 50 names. In any case, you look at this one, it runs up, and you get a nice move. In 2 weeks, you run up from, let's say you get in around 22, right off the 20-day line, you run up to 32, and now you start to roll back, and you drop below the 10-day line. So in that case, I might sell out and then wait. And then what happens is you come down and you undercut the 20-day line on June 16th, and then you rally back above it, and you hang tight along for 3 days, and then you actually post a pocket pivot in there on second day.
Hold on. So going back to May for a second. So you had that big green candle volume.
Gap up. It's a gap up off the lows.
Right. And so you held that low 2 days later, and then 2 days later it held the 20 days. So by this point, it's been 4 days. When is your actual entry point? Because at this point,
it's going to be right along the 10-day line. It's close to the intraday low.
I'm sorry, the 10-day line. So like the 14th and the 13th, because at this point now we're on we're 3 days. We're 3 days after the breakout now. So right. I'm trying to understand your entry.
The entry would be at the 10-day line, and I'm not afraid to buy pullbacks, because that's how you enter stocks. You don't chase the strength. That's a good way to get your tail in a sling, shall we say?
Okay.
And then you get the news, that they're teaming up with some British company to build a bio printer or something, and that's what sends the thing rocketing higher. So wasn't in for that move, but still, that sort of thing could have been bought along the 20-day line. And you're buying on weakness, not chasing strength, because you can see if you go and chase that big bar on June 22nd, you only get a couple, 3 days, let's see, 1, 2, 3, about 4 days, 3 days of upside up to about 40, then you roll back, Now, over the weekend, I noticed that the chart, and you can see that would have been 3 bars ago, the chart's sitting right there, the stock's sitting right at the 20-day line. So it looks to me like it's going to shake out at the 20-day line. So I want to go long there. And that would have been yesterday morning. And within the first 5 minutes, I'm looking at this thing, and it's up $1.50. You look one way, and then I look back at my screen, and things up $1.50. It's kissing the 36 level. I think that's 35.98. And then on my 620 chart, I noticed that it's rolling over. And so at that point, you can flip out of the long, but in some cases, you just end up taking a profit. But then when it reverses back below the 20-day line about 10 minutes later, you could flip to the short side. And sure enough, it breaks down. And today it's moving even lower down to the 50-day line. So, that's another example of how you're basically operating by the seat of your pants. I have a lot of tools that enable me to handle this type of action. And they're not, I'm not chasing strength on the upside. On the long side, I'm not chasing weakness on the short side. You're trying to be more opportunistic, a little more cunning, a little more, opportunistic. And so now, it's breaking down. Look at Virgin Galactic. If you look at that one on a weekly chart, let me know if you got that up, since I can't see anything.
I got it up.
Now look at that pattern. If you look at stock, every time, as I was joking yesterday, every time it goes into orbit, it comes in for a fiery reentry. So this is the third time it's gone into orbit. And you'll notice when it gets up close to 60, it's approaching those highs from when everything in the FOMO land topped, which is February. So it approaches those 60 highs from February. And that's the left side of a 77% deep cup type formation. I call it a martini glass formation, or I used to call them punch bowls. But when you have a move like that, 6 weeks straight up the right side of a big V-shaped pattern that's 77% deep, it hasn't taken enough time to consolidate those gains. So it's vulnerable to a snapback, especially if the move was based on news, So to me, it's like, okay, Richard Branson went up in space. Big deal. What's it? I mean, it was pretty cool. I mean, I got to admit, it's pretty cool because I also have to admit I'm a space junkie.
Okay.
And I do have a model of one of the Unity or one of the Virgin Galactic spacecraft that I built.
Ah, there we go.
Yeah, and you can go on my Twitter page and see me playing with it. I play with it every day. But I mean, I think it's really cool. But from an investment standpoint, the reality is, all right, these guys have done what, 22 test flights? One guy got killed. Okay, so that's 1 out of 22. They say they're going to do 400 a year, and they're going to make $1 billion a year. When? Well, they need to build.
Eventually is the idea.
Yeah, but in my view, that's all baked into the cake at that point.
Okay,
so what happens here? This becomes a punch bowl of death short sale setup. So in this case, the punch bowl is more like a martini glass, but the basic idea is a big cup or V-shaped formation that is so steep that the move back to the highs cannot be sustained because it was too quick. Follow me?
Yeah.
So there you go. So now look what happens. So what we do is we're shorting it up around close to the 60 level. And, yesterday morning you get up at 4 o'clock my time when we start trading pre-open, and it's sitting at 55. That was like, that's a no-brainer. So unfortunately I couldn't borrow any shares, so I'm still ticked off about that. But I know a number of my members picked that one off and were able to borrow shares, those dogs. And now they're making money. Okay, so now in a typical punch bowl of death short sale setup, when you break the 10-day line, that's your first signal that something could be breaking down. And once you break the 20-day line, that's your confirmation. That occurred yesterday. So that's another entry, and it's heading lower. And I wouldn't be surprised if this thing at least hits the 50-day line in the next couple of days. We'll see what happens. But,
all right,
this is cooked, but it's a two-way trade.
Yeah.
Because it also could have been bought 2 weeks ago on the gap up move.
Gil, before we let you go, someone in chat asked when your next book is coming out.
No, I don't write books anymore because number one, I'll tell you why. My websites are living books.
Okay.
Because things change so quickly in this market, you have to be updating in real time. Books take 3 months minimum to write, and then it's just a slow process.
Okay.
And so I say just go to my websites. It's all there.
So the link is in chat. It's also on the screen, virtueofselfishinvesting.com. Did I get that right?
Well, that's one of them. The other one is GilmoReport.com.
All right, Gilmo Report. That's easier. Gilmo Report.com. That's up on the screen.
You can follow me on Twitter at Gilmo Report. So we're consistent.
GilmoReport.com. Gil Morales is the author of the Gilmo Report. Gil, you have 2 minutes. Please cover all your shorts. God forbid you go into the close.
I don't know. I may right now. I'm the only thing I've got out of the index shorts. I may hold them into the after hours and see what happens. Also, UVXY is working. So I don't know. It's a fun day. I wasn't expecting this. Got to tell you, I wasn't. But that's the way this market is. You never know what's happening. Anyways, glad I was able to join you.
Thanks
Sorry
a lot,
about
Gil.
the glitch.
Thanks a lot. All right, good luck, man. This guy has an uncanny ability to just find good setups. I don't know how he does it. Some people are just good. I didn't even get to talk about the other things I had on my list, right? I had a whole bunch of things on my list. Not a whole bunch of things, but I want to talk about the banks a little bit, right? Want to talk about here JP Morgan, Goldman Sachs. We were right on this one. I'm wondering if this trade is over now. You look at Morgan, you look at Wells, you look at Citi, Bank of America. I want to talk about DD. Yeah, I saw the DD move. Whatever. It's 4 o'clock. Yeah, there's the bell. All right. Go ahead and drop a like if you could. I would appreciate that. Smash the like button for Gil Morales again at Gilmo Report on Twitter. And GilmoReport.com is his website, GILMO report.com. That's going to be it for me. And we've got Money Mitch up now, followed by the Cannabis Insider Show, followed by After Hours with Ryan Rose Biani, followed by Trading Nomadic. Everyone have a good rest of your day. I will see you bright and early tomorrow morning, 8 a.m. Eastern Time.